Hi guys, I'm Karunya Rao, and in Ideas for Profit we talk about Mindtree. It has been a winner from our recommendation list. We had suggested it as a weekly tactical pick back in Feb 2021 at a price of 1604 rupees. The company continues to justify the run-up in the share price by delivering strong results, and Q1 FY22 was no different. Superlative revenue, record Dealwin, and strong outlook for the future were the key highlights of its earnings report. Record hiring also showed management's confidence on demand while trying to adeptly manage the supply side crunch. Going forward, we see a strong earnings trajectory, hence, albeit the optical expensive valuation, existing investors should hold the stock and new investors should definitely look to add on every decline. Q1 FY22 revenue at $310.5 million showed a sequential growth of 7.7% in reported currency, the third consecutive quarter of above 5% revenue growth. Thanks to the suppressed base of the year-ago quarter, the year-on-year growth was an impressive 22.6%. Investments in continental Europe have paid off, with the market showing strong growth. The key market of North America, with a revenue share of 77%, also delivered a healthy show. All five industry verticals, whether it's communication, media and technology, retail CPG, travel and hospitality, BFSI, as well as the newly carved out healthcare, showed positive sequential growth. BFSI, if you look at it, is making a comeback after a dull patch. Out of its four key services, customer success, data and intelligence, cloud and enterprise IT, the company is witnessing strong demand from customer success and cloud, especially from its top 20 clientele. The top clientele, with a very large share of over 27% in the total revenue, have seen good growth. However, with the scorching pace of company's overall growth, the share of the top clients is falling. The business is getting more de-risked, with non-top clientele growing faster than the company average. Meanwhile, Dealwin momentum was the best ever, with the company bagging deals worth $504 million, up 34% sequentially. The Dealwin has a good share of annuity deals, and the company expects the momentum to remain strong given the healthy pipeline. Looking at the strong demand environment and robust business visibility, the company has added a record 3,442 people, taking the total, or rather the overall headcount, to 27,256. It does not foresee execution challenge due to supply side constraints. The strength of demand and beefing up of delivery capabilities with timely hiring is giving the management the confidence to reiterate its earlier guidance of industry-leading double-digit growth with stable margins for FY22. Despite seeing positive impact from revenue traction and operational efficiency on margins, EBITDA margin showed a sequential drop of 160 basis points, mainly because of record hiring, which had a negative impact of 170 basis points, and visa costs, which had a negative impact of 40 basis points. However, this was partially offset by cross-currency tailwinds, revenue growth and operational efficiency. The company saw a significant increase in subcontracting expenses as it could not arrange the right resources in the ramp-up phase of certain deals. Mindtree is also seen an inching up of its attrition rate from 12.1% to 13.7%. Given the strong demand outlook and severe supply crunch, in addition to the accelerated hiring of freshers and laterals, the company is likely to implement selective remuneration increase for junior as well as for mid-level employees in Q2 to retain key talent. Near-term margins might get impacted, but banking on the levers like high offshoring and revenue momentum, it expects margin stability all the way in FY22. Mindtree remains a winner in the new normal, with a head start in adopting technology. With its 4x4x4 strategy of targeting 4 geographies, industries and service lines, it is bringing a sharper focus on client mining and execution that has already started yielding results, as is evident from the traction in deal flows and the confident outlook that the management has flagged off. It is a long-term winner in this technology upcycle and should be added on every decline.